Hello, I'm Asif Farouk of Finextra, and we're here at Cybos 2014 in Boston, and I'm with Chris Larsen of Ripple. So Chris, thank you for joining us firstly.
Thanks so much for having us.
You're welcome. So recently in the news we've heard about Ripple signing 2 US banks, which is, I guess, great news for you. And I'd like to know the process behind that happening. How did that all come about?
Yeah, so we just announced that we signed up CBW out of Kansas and Cross River Bank out of New Jersey. And obviously with banks, banks are rightly careful about any new technology for regulatory purposes and for stability purposes. So these conversations do take a while, 6 months to a year, we think, to really sort of introduce the concept and then how can it be applied, and then starting to talk about pilots. But we're really pleased. These are the first US banks now on the Ripple protocol. So we think we are starting to get our message out there that these new technologies, distributed ledgers, really can be seen as alternatives, really viable alternatives to correspondent banking. And that's very powerful for particularly these smaller banks that otherwise have to rely on correspondent banks.
Okay. So am I right in thinking the strategy is then to get kind of a nationwide deployment of Ripple? And if so, how is that going to work? What's the strategy?
Yeah, so the strategy really is now first try to get a bank in each of the key regions of the world. Because if you can connect one bank on ACH in the US to one bank on SEPA in Europe, you have effectively connected all of the banks on those 2 networks. So you really get a multiplier effect. Now we have this Fedor out of Germany on SEPA, and we have now these 2 US banks on ACH. Now we got to work on China, we got to work in South America, India, and really continue to spread it and get to some of the bank networks. So definitely getting banks as gateways to bring currencies onto the platform is very important. And then along with that, bringing market makers to make markets between those currencies, cross currencies. We've already been pretty successful there. We have about 7 institutional market makers already. Now it's really kind of filling it up with banks.
Let's talk about here, because we're at Cybos, where all the major banks are now placed, and you're in kind of close proximity to them all. What's the relationship with these big banks, and how do you deal with them?
Yeah, so the big banks obviously are correspondent banks. So in some ways, we're talking about an alternative to that for the smaller banks, which we think is powerful. But we still think for the bigger banks, there's a ton of interest in these technologies, these distributed ledger systems like Ripple, because they really, I think, a lot of people are looking at them like this is really the dawn of the Internet of Value exchange. And if that's true, then big banks, small banks, everyone can benefit from that. They're free infrastructures that everybody can ride on as sort of free rails, including the biggest banks. And we've actually had tremendous success, at least having many conversations with the big money center banks as well. So we think there's lots of applications there that they can benefit from.
Okay. Going back to the 2 banks that you have already signed to Ripple, what would then be the real world benefits for those banks' customers?
Yeah, so the real world benefits to those banks' customers are driven by the benefits those banks get by having an alternative to correspondent banking. If you think about correspondent banking for a small bank, it's expensive, a lot of fees. They have to put up a lot of capital, so it's capital intensive. It's a slow process moving money from US dollars to euro, multiple days. There's risk in the system because things can break in the middle. And most importantly, there's no competition for that exchange rate. The correspondent bank's just forcing probably a bad exchange rate on that bank who's passing that to their customer. So the customer of those banks now should be able to get transfers in seconds instead of days at the most competitive exchange rates, because now suddenly the entire world is competing for that stream of payments that we're otherwise locked out of, and reducing the fees. The customer might see that in lower fees, or might just see that in a faster process. Up to the bank. Like I know Fedor Bank, for example, might offer either faster service or maybe premium fees. You can trade off one or the other. Up to the bank to do that, and we're happy to support that.